Hello and welcome everyone to Gold Asset of the Day for the 25th of February 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we go into a new week? Well, firstly, I want to congratulate all of you that managed to capitalize on the parabolic move that we've seen in the latest week. So gold prices have broken out to 7-year highs. So we've essentially tapped the highest levels here since 2013. And of course, last week we discussed this with you in detail, where we have bought into the dips in the previous week. We have built 4 positions and we continue to let those trades run up with this entire escalation with the coronavirus, which of course has given gold the safe haven bid. Now, in the latest week, we did see that hedge funds and money managers, they increased their net long positions again for 2 straight weeks running, significantly so as well. Whereas retail traders last week, over 65% have been selling into gold. They've been looking to sell into gold at that 1611 zone, looking for a double top. They'd also been shorting at that 1649 zone just on Friday as well. And now many of the retail traders, essentially the purely technical based traders in the market, have been popped out of their sell short positions with gold. And subsequently, we've now seen, after the parabolic move at the beginning of this week, with gold breaking out to 7-year highs, now a lot of traders, certainly at the beginning of the week, have got FOMO. They're bought in too high to gold, especially with the breakout to $1,689 per ounce. And now we're of course seeing the profit taking, we're seeing the pullback, which is very common after a parabolic move like this. So what to expect next? The way that we've traded this in the last couple of weeks is to continue to build our long positions, where we've got to a point here where we've now banked all of those long trades for 2,000 points. We reversed position yesterday on Monday. We went for a sell short. So far, we've banked 300 points on the sell side. We've protected the trade and we've opened up the profit target. Now, typically, as we transition into March, April and May, this is not a strong time of year for the precious metals, and it's very common to see the top get put in the final week of February and into the first week of March. So we're starting to plan for this at the Gold and Silver Club. We're already seeing that correction take place. However, we positioned for both sides of this. So we've capitalized on the parabolic move to the upside, bank profits, reverse position now, and we're selling short. However, what we might see now, considering that gold has already had a significant sell-off over the last 24 hours, which we've covered in detail, by the way, on our week ahead commodity report. So if you haven't watched that, I would definitely encourage you to watch yesterday's report, where we discussed this sell-off before it actually happened, before we've seen this large 300-point sell-off to the downside. What I would look at now for this week is the potential for a bit more range-bound trading. As we move into March, I am expecting a correction to start to build momentum to the downside. We've already tapped today $1,633 per ounce. We've already seen a significant decline with gold overnight. So I am expecting the potential for gold to move sideways here, consolidate, but provide opportunities to just trade within the ranges. We're going to hold on to our sell short position for now, which we've executed at higher prices, but just bear in mind, usually as we move into March, April and May, this is where the precious metals do correct. As I mentioned last week, you don't want to be FOMOing in at the highs, because this is where you can get trapped at much higher prices. You might not have an opportunity to actually exit those trades for a while, especially if we don't see gold continue this move back towards the 7-year highs again. A lot of this, of course, will also depend on the narratives with the coronavirus, but we have seen a lot of that priced in with the parabolic move that we saw at the beginning of the week. And if we were to break out higher again, we would very simply exit the remainder of our sell short at entry price, and we would reassess the potential to actually enter in at higher prices for another sell short, as we're looking for these corrective moves now as we go into March, April and May. Now, this is a very different shift for us, where you know that we've been going long since December, since January and February. So what we're seeing out there at the moment is many traders that missed this entire move. And you've probably seen it yourself from various news feeds and news articles. It was all over major news feeds just yesterday that gold had broken out to 7-year highs. We've seen it before. Whenever a market goes parabolic like this, this is where many traders, they get in right at the end of the move. They FOMO in at the top. And this is often not the most optimal time to be building positions, where of course we've been building positions since December here for this massive rally on gold, which has ultimately given us 2,000 points. So with that, of course, I wish you good trading, and that's been Gold Asset of the Day.